What's going on, guys? I was talking, having a one-on-one call with one of the members inside of Evolution Traders inside the gold members room. We do a lot of one-on-one talking, a lot of one-on-one coaching. We do a lot of back and forth through DMs. But one thing that, kind of really stuck out to me today that I wanted to kind of share and pass out to everyone because I think it might be helpful to traders out there. And one of the problems that this trader was having was, feeling a lot of anxiety, a lot of FOMO, and getting stopped out early in the day and then kind of putting themselves on tilt. So if you've ever kind of, maybe won a trade in the morning and then lost one and then now you're on tilt, or you ever started off the day red and then just didn't know how to recover and ended up going on tilt or even losing accounts. This happens a lot, but a lot of the work that we do inside of Evolution Traders, it's a lot of one-on-one discussion where I'm trying to help traders in real time answer questions to the best of my ability. But anytime something kind of sticks out in my mind, I definitely want to bring it to the light and bring it to the forefront because maybe it might help another trader out there. So in this particular case, my best recommendation, my best advice was, if you have not, right, if you've absolutely have not taken a payout from a prop firm, or paid yourself from a personal account trading futures, I've got a very hard rule, and it's not a hard rule that is going to take a lot of effort to do, but it's a hard rule as far as there's a line in the sand that does not need to be crossed, and that is you should not be taking trades inside the first 20 minutes of the New York Open. I don't care if you have a setup and it looks beautiful. I don't care, because a lot of times traders will jump in on a move like this, not understanding that when you're back testing, this looks like a solid move down. This looks like a solid move up. But a lot of times when the ranges are this steep, right? The candles are 97 points. What happens is sometimes you jump in short, and while the current price is pushing down, it's also chopping around and bouncing up 10, 15 points. So let's say you do get in here with a couple of mini contracts, it goes down 5 points, you're looking at the P&L be green. Next thing you know, you're watching the P&L, at 300, 400 in the red, and you're getting stopped out, and you're like, what the hell just happened? The next thing you know, once you zoom out, you're like, how did I lose money when it just went straight down, right? Volatility, the range, it's way too much for you. The price action is moving too fast. We're going to forget about all this, guys. We're going to forget about all this stuff in the pre-market. We're going to forget about all this nonsense off the open. What we're going to do is we're going to limit our trade count, and we're going to look for one setup until we start taking payouts. Okay. I think a lot of people are too busy and too focused trying to chase the move down and trying to catch the reversal back up. And, where could I potentially find, a breakout trade for a continuation? And what do I do during the chop? Oh, I don't know. I just get chopped up and lose my account. You're worried about too much, too fast. Here's what we came to a conclusion on for this one specific trader, and maybe this might help for you. Inside the first 20 minutes, you are not taking a trade. We're just not going to do it, right? We're going to protect ourselves. We're going to allow the market to slow down, because for whatever reason, the market's moving too fast for you as a trader, for your experience level in the first 20 minutes. We need to remove ourselves from that environment. Okay, that's going to solve a lot of problems right then and there. Also, inside of 30 minutes, what we're going to do is we're going to cut our position size down in half. So if you're trading one mini contract right now, we're going all the way back down to 5 micro contracts until we start to build a buffer. Okay. And then from there, we're going to stick to one setup. So in this particular case, we're going to stick to the 20 SMA strategy. We're going to use a 1-bar stop. We're going to trade 5 micros. So you're going to be risking 35 points on this particular example that I'm showing you. You're going to risk 35 points. So you're looking at a $70 loss per micro contract. This is all in all is around a $350 losing trade if it does lose. But we're also targeting, listen up very closely, we're also targeting 35 points, 30 points to the upside. So this could potentially be a $300 to $350 winning trade as well. So again, when you start trading this way, it's going to slow the whole game down. Now, that's the benefit to having a community, having access to be able to talk to other people one-on-one live in real time, because we can start to fix problems that are presenting themselves on a day in and day out basis. And a lot of times for a lot of traders, you're sitting there all by yourself and you're really not able to kind of see what's going on, what are the problems, right? You know that you just took a losing trade, you understand you need to have rules, you understand you need to have a stop loss, you understand that you need to maybe do X, Y, and Z, but you still can't put all the pieces together. And a lot of times, right, a lot of times we were going over some metrics from this one specific trader, and a lot of times it's, you know, you're not really paying attention to the fine details. So on this one specific trader that I was having a discussion with inside of Evolution Traders, inside the gold member section, was that if we break down a lot of your trades, a lot of your losing trades, with 72% of the losing trades, were coming from inside the first 10 minutes. So if we can eliminate 72% of those trades, it's only natural that we're going to see a progression to the positive side, okay? Because if so much negativity is coming from that first 15 minutes, we're gonna sit out 20 minutes and we're gonna see the market clearly, and we're gonna not focus on trying to trade momentum or breakdowns through the previous day or breakups through pre-market highs. We're not going to focus on any of that. What we're going to focus on is one setup until we build a buffer. And the buffer that I like to see traders build is at least $1,200 to $1,500 in profits before we start expanding on the setups and the trade counts. And for sure, we're not looking to take more than 2 trades a day. And a lot of traders don't want to hear that because they want to sit at these screens and pretend that they're Jordan Belfort, Wolf of Wall Street. They want to pretend that there's some, you know, big institutional trader. You're not. You're a retail trader looking to make a buck. You're looking to make a, you know, $1 out of 15 cents essentially with these prop firms. So you need to take a much slower approach. You need to have a realistic attitude, and you need to actually do things that are going to fix the problems that you're having. If something like that sounds like you, make sure you guys jump into Evolution Traders, guys, so we can try to pinpoint and figure out what the hell is going on with the trading. Again, I enjoy that you guys are sticking around for these free videos on YouTube. Do me a favor, give me a thumbs up. Make sure you guys are subscribed to the channel. Leave me a comment. Let me know how you guys did today as well. If you want any of the information that I'm discussing kind of in this video, and maybe you want to take advantage of some of the access that you guys can get, all of those links are down in the description box below, and I'll see all of you guys on the next video.